Hello, everyone, and welcome to the launch of IRA Cafe with American IRA. Whether you're joining us on the East Coast and starting your lunch, or you're on your second or third cup of coffee on the West Coast, we welcome you to dive in and learn about the most powerful retirement vehicle out there known as the Solo 401k. I'm Kyle Moody with the sales team here at American IRA. It's a privilege to be with you today to give you some information on this really good retirement account that folks are finding a lot of value in. Here on the screen, you actually see our founder and CEO, Jim Hitt, who began American IRA in 2004. We're a third-party administrator. That means that we're doing a lot of the processing, record keeping on behalf of our custodian, who is New Vision Trust. To date, we manage over 700 million in assets for our clientele all across the country. And why do those folks choose American IRA? Well, we hope it's going to be the same reason or reasons that you would choose American IRA. Number one are our low flat fees, but sometimes it's not always the smaller amount that someone is going to have to pay. They want to know what that relationship is going to be with their company. And so for us, we really do offer that local bank feel that when you walk in, you know who you're going to be working with. When you call in, you know who you're going to be asking for. You know that there's going to be that special receptionist that's going to pick up the phone and direct you to who can help you. And that's what we have here. We don't even own a phone tree system. So when you call in, you're going to be met with a warm voice and seeing how we can help you at that time. We do have on here, we're very proud of our Better Business Bureau rating, almost 5 out of 5 stars. And then always the Google reviews, we are currently sitting at 4.8 on that. So is the Solo 401k for you? Who actually qualifies for the Solo 401k? What is it and how does it work? We're going to delve into this a little deeper here so that you can see if it is meant for you and then how you're going to be able to use it both as you grow your retirement for your company, your income, and how you might be able to use it for your investment objectives. One of the first things that people need to, the box that they need to check is that you need to be a business owner with no full-time employees. You're going to see here 1,000 hours per year. And where we actually go with that is someone can have contracted employees or 1099s, and they can also have part-time employees. And those part-time employees, they have to have underneath or less than 1,000 hours per year. So in summation, a business owner with no full-time employees. There's a couple exceptions to that. There are spouses that work together in the entrepreneurial business. And if that's the case, then your spouse is not considered a full-time employee, and nor is the business partner or an officer or the highly compensated employee. There's advantages to solo 401ks that although IRAs are great in their own realm, the solo 401k really rises above and has few things that does set it apart. Number one, it's got much higher contribution limits than what someone can put away in an IRA each year. Now we're going to take a look at some of those numbers in a minute. For the employee side of the contribution, account holders have a built-in Roth provision that they can also put the money away as well. So when you're making your contributions into the office and doing your deposits, you're letting us know whether it's going to be a pre-taxed contribution or a post-tax contribution. It's the only retirement vehicle out there that allows the account holder to loan to themselves for any reason. And that's where you see here the borrowing capability. And then also you are able to leverage with your account to procure a property, for example, without UDFI. And we'll take a look at that in just a second as well. So what can you put into a solo 401k? Okay. We talked a second ago about the much higher contribution limits, and this gives you an idea here. So in 2022, for example, someone could max out the employee contribution at $20,500 where in 2023 that has increased to 22.5. Now, anyone that's 50 and older had a catch up in 2022 of 6,500, and that has increased to 7,500 in 2020. So you've got your employee contributions that you can make, and then you also have the employer match. Let's take a look at how that really breaks down. So on your employee contributions, these can be pre or post tax. So if you remember on the earlier slide when it said that you could have basically traditional or Roth contributions, well then here it is. And those contributions are going to be $22,500 for anyone 49 or under, and a max of $30,000 for anyone 50 and older. Now, as the employer contribution match, where it comes in, it's going to be 25% of your gross, and generally you're going to see this with an S corp, whereas anyone that's a sole proprietor or an LLC, it's going to be 20% of your net. Now, generally speaking, when I'm on the phone with folks, I don't always give out this dollar amount that you see there that's 43.5. I always tell folks that the math has to work out in maybe what their company is making each year. Generally, as you all know, if you've been doing this a while, you know that that number is going to change year to year. And so as long as you know the way you're filing, the type of company you have, again, whether it's the S Corp, sole proprietor, or LLC, you know what that percentage is going to be, but just know that that max dollar amount down there, that's your top number. So if you take that 22.5 or the 30,000 on the employee contributions, and then you're maxing everything out that you can on the contributions when you come in with the company match, and the total max contributions for solo 401ks are $66,000 for anyone 49 and under, or $73,500 for anyone 50 and older. Now, one of the other things that you heard me say earlier is that it is the only retirement account. IRAs, Solo K, it is the only one that will allow the account holder themselves to be able to borrow from their own. And that is up to $50,000 or 50% of the account's value, whichever is less. So if you have a solo 401k in this example, that's a $30,000 account value, then you can borrow up to $15,000. Delving in on a little bit more of an advanced slide here, this is still the borrowing from your account, but then also being able to partner with your account on a business deal. From time to time, you will see folks that might want to bring in their personal funds and partner those with their account funds in an IRA. So that way they're not having to worry about leveraging, not borrowing from anybody else. They're using personal funds along with their retirement funds to make the investment. Here, it's the same thing, except now you are actually borrowing from the retirement account itself. And as a 401k, as we learned earlier, the account holder is allowed to do that. So you got $150,000 in this example in your solo 401k, then you know that you're going to be able to borrow at least $50,000. And there is no limit to what you can use that for. If you're looking to purchase a $100,000 property, you use $50,000 with the money that you just loaned to yourself from the solo 401k, and then you're going to partner in that with the solo 401k to make the investment. And there's the 50 that you borrowed and the 50 from the solo 401k. You bought the property for $100,000 and you sold the property for $200,000, and there's your $100,000 profit overall. You look at the percentages of how the investment was made. 50% of that purchase came from the solo 401k. 50% of the purchase came from the money that you borrowed. Another aspect of using the solo 401k and it being a benefit compared to an IRA is the advantage of being able to leverage. Generally, what we see is that if someone were to use an IRA and they needed to procure a non-recourse loan to make the investment in a piece of real estate, then they may not be taxed on the amount of the loan itself. Rather, they may find that they're going to be taxed on any profits that come in that year based on the percentage of the loan amount at the time of acquisition. And by that, I mean if you have a $100,000 property, if you used $40,000 from a retirement account and you secured a $60,000 note, non-recourse loan, and let's say the property, you made $10,000 that year, up to $6,000 of that profit could be subject to the UDFI, or the unrelated debt to finance income tax, because the funds at the time of acquisition came from outside a retirement. With an IRA, you would be subject to that UDFI taxation. With a solo 401k, you are not. There's different plan options that someone can have when opening up a solo 401k, and it's really tailor-made to what works best for the account holder. There's the plan and record keeping, and there's a couple of options for those depending on your level of activity, where you just see yourself maybe doing one transaction a year. You might be a candidate for someone who is going to choose the lower option one, where you actually, if you see yourself doing multiple transactions a year, 2 or more transactions a year, we have an unlimited. Open up your solo 401k account, and through any processes of needing any assistance, have questions, and you just need someone from client services to assist you, or whether you're doing your full-on transaction, you will actually have the benefit of calling in and being able to speak with your transaction specialist, who is going to assist in any paperwork, answer questions for you, and help you move towards your investment. We also offer the plan only. This one differs in the fact that once we create that solo 401k and allow you to, for lack of a better phrase, park that at the banking institution of your choice, let's say. After we create it and then move that where you direct us to move it, then we will not be your go-to for any of your transaction services, client services. That document was prepared, created for you, and then we won't be able to have we can't offer any assistance moving forward. Generally speaking, you will see someone use this if they're looking for more of a full-on checkbook control with their solo 401k. Very high level at this. Again, you heard me say earlier, this is the most powerful retirement vehicle that someone can use for their investing, and as such, it needs to be considered by someone who is at that level, knows the ins and outs, and quite honestly has a great relationship with any of their legal advisors, tax professionals, to answer the questions where we are not going to be in that loop. I know that we've covered some topics, and hopefully it has been pretty smooth, and someone can see how the account works. Now, when you are getting ready to use it for your account, it's as easy as completing your application and getting your account funded. And whether that's going to be rollovers or transfers of funds, so you have your account now opened and the money is sitting there for you to then select your investment. Whether that's going to be a piece of real estate, whether it's going to be a promissory note, investing in a private company or precious metals. American IRA will assist you with the documentation that's going to be needed. It's an investment kit that will give you all the bullet points of everything that's going to be needed to complete your transaction. And the day that we move the funds for that transaction, that now your 401k purchases and holds that asset. I really appreciate your time today. I hope you enjoyed your lunch. You enjoyed that next cup of coffee. We look forward to the next time we get to meet at the IRA Cafe. Again, I'm Kyle Moody. You can reach me at 828-257-4949, or you can email me at kyle@americanira.com. Thanks. We'll talk to you again soon.